I mean, what, 6.8% here, 7.8%, I should say, in increase when it came to the PPI.
Yes.
Now, and then you look at CPI, and you're going to yourself, hang on a minute, they're both heading in completely opposite directions, but having said that, you know, CPI is almost into disinflation territory now. Okay, so how does the People's Bank of China look at this?
Now, I think we need to be a bit careful about the CPI number in February, because if you look at the breakdown, the major reason for the CPI, the low CPI, is because almost over 4% decline in food prices year on year. And I think this has largely to do with Chinese New Year. Remember, Chinese New Year in 2006 is in February. Chinese New Year in 2017 is in January. So this, I think, creates quite some distortion. I think for PBOC, the general angle is that there are some inflationary pressures start to build in China's producer system. But at the consumer level, I think at this stage it's still relatively mild. So I think very likely, if I'm sitting in the position of PBOC, I more or less will do the same thing as they're doing now. On the one hand, they are tightening through reducing the activity in the bond market, which effectively pushing up the funding cost for corporate, but don't touch the benchmark interest rate at this stage yet.
Right, so, I mean, if you had several more months of this, then, of course, they'd be looking to loosen monetary policy because PPI is thought to actually come down given base effects.
I actually, because we did some analysis, I actually don't agree with the proposition that PPI will drop very fast, because if you look at on a month-on-month basis or year-on-year basis of PPI, up until like August last year, they are still declining. So that means in the first almost 3 quarters this year, I think the base effect for PPI is still quite low. So that's why I actually think that PPI is not that easy to drop so much this year. Okay, unless you tell me that oil price go down to $30 per barrel, then that's a different story. Well, otherwise, I actually think that PPI could be, well, our view basically is that PPI could be quite high this year. It could easily average over 5% for the full year. We are already assuming some slowdown in the second half. CPI, we actually think that it probably will be only slightly over 2% for the full year, because most importantly, we haven't seen signs of pickup in food inflation yet. And in China, previous 20-year cycle without a pickup in food inflation, you never get a strong CPI in China.
Yeah, Vincent, those trade numbers out yesterday were pretty unusual, even for the time of year. Do you put it all down to seasonality? Because a lot of people are saying, look, export growth is meant to be really strong this year for China. Is that trade deficit expected to continue? Or do you think that really doesn't reflect the true trade dynamics when it comes to China this year?
Now, I think I'd like to combine the 2 months data for the analysis, because Chinese New Year could be quite distortive. Combine the first 2 years, export growth is 4%, which is more or less in line with, well, I would expect China to be a mid-single-digit type or slightly better than mid-single-digit type of export growth for the full year. Now, I think the whole region's exports are picking up. China is a laggard. China has lost some market share. This is unquestionable. So I think on the export side, now, import is pretty interesting. I think on the one hand, import volume is low, I think low double-digit growth, roughly, in the first 2 months. And then the import price is rising a lot because of commodity prices. So you definitely will see a deterioration in the trade, in terms of trade in China. Whether China is already getting the trade deficit territory, that may be a bit too early to say, because when we take away some of the seasonal factor, I think basically we still have a small surplus in trade for China. But this is worth watching, because I think this year China is kind of like either it has a small trade surplus or it may go to the borderline trade deficit territory.